Welcome to Dukascoin TV on Finance. Today we got some financial news updates for you on the way, and our job is to keep you updated on what's going on around the world in the financial area, on personal finance, crypto, stocks, and much more, so stay tuned. So last week we saw that the negotiations between Russia and Ukraine seem to be making some progress, and the Moscow Stock Exchange reopened on the 24th of March and closed at 4.5% higher. However, foreign investors have not been able to access their investment till today to sell it. Access to investment might lead to more devastating effects on Russia's economy. To prevent that, the Russian central bank increased their interest rate to 20% to discourage more capital outflow from Russia. Now, here's the catch. With this crazy rate, no one knows how the Russian central bank plans to tackle inflation since the cost of living jumped by as much as 14% over the past week. All this was due to the sanctions placed on Russia after Russia invaded Ukraine. The effects of these sanctions are currently devastating Russia's economy and will take a long time before the economy can recover. To continue trading oil with its allies and avoid sanctions, Russian President Vladimir Putin indicated that he wants unfriendly countries to buy Russian gas in rubles. Russia is also considering accepting Bitcoin as payment for its oil and gas exports. The action was intended to strengthen the Russian ruble, which has lost nearly 20% of its value this year. Also, Pavel Zavalny, a high-ranking lawmaker, says friendly countries might be permitted to pay in crypto or their currencies. If Russia decides to accept Bitcoin as a currency to trade its oil, then it's a big win for the crypto markets. Now that Bitcoin is being considered among the Russia elite as a currency for transaction and amongst the commoners as a hedge against the crumbling ruble. Does that mean good fate for Bitcoin? Moreover, we saw the Bitcoin's price surpass 46.8K in 2 hours over the weekend, climbing to more than 4% to a 3-month high. The digital asset has risen nearly 12% since last Sunday. Recovery in global asset markets is why this bullish momentum is expected to persist in the short term. The sustained bullish momentum was majorly due to the 125 million USDT purchase of Bitcoin by Luna Foundation guard LFG. This purchase is part of the plan to systematically accumulate 3 billion USD worth of Bitcoin as a reserve for Terra USD. Also, El Salvador's president is placing a massive bet on Bitcoin using the country's treasury. President Nayib Bukele hopes to generate $1 billion for the government by issuing Bitcoin-backed bonds. Bukele intends to seek money from worldwide cryptocurrency dealers to escape his detractors from the United States and those at the International Monetary Fund. We have seen Bitcoin remain strong, even after the Federal Reserve's decision last week to raise interest rates. A break above the $50,000 mark will signify the beginning of a bullish trend that might spill over to the next quarter, considering the rising rate of inflation worldwide. Talking about interest rates and inflations, the growing cost of living in the United States is making a lot of individuals in America cut back on their expenditures. With the inflations, the pandemic, Russia's invasion of Ukraine, all contribute to the tough times that many Americans are facing right now. The Federal Reserve now agrees that there is an inflation problem in the US. We should expect some hikes before end of the year. Some analysts believe we should get 25 to 50 basis points. This depends on what happens to employment rates, whether they are high or low. However, February's jobs report showed an improvement in the U.S. labor recovery. The U.S. unemployment rate fell in February. We saw more substantial jobs growth than expected, with the NONFARM payrolls rising by 678,000. The overall unemployment fell to 3.8% from 4% in January. Now, this means Americans are getting back to work, and we should not expect an aggressive hike in rates from the Federal Reserve. It's worth noting that the 10-year Treasury rates were up 14.7 basis points to 2.5% after briefly reaching above 2.50% for the first time since May 2019. The 2-year yield, which rises in correlation with the interest rate forecasts, has jumped 16 basis points to 2.284%, the highest level since early May 2019. So how can investors protect themselves against the inflation problem? Treasury inflation-protected securities guard against anticipated inflation spikes since their price rises in sync with the consumer price index. For the ordinary investor, TIPS are by far the best inflation hedge. Historically, real estate has also done well in periods of high inflation. Now, this is because the property value might increase. And what does it mean for you? It means that your landlord may increase the rent, thus increasing their income and keeping it in line with the growing inflation. In addition to house ownership, real estate investments can be undertaken through real estate investment trusts, also known as REITs, or mutual funds that invest in REITs. Investors have several alternatives for protecting themselves against inflation, but the Treasury is one of the safest investments. Otherwise, please take advantage of an inflation spike to assess your overall investment performance and a location to ensure it aligns with your goals. Also, don't make dramatic and drastic adjustments to your portfolio based on current inflation or market conditions. And that's all we have for this episode, but make sure you keep yourself updated with the latest financial news on all our social media, and I'll see you soon on the next episode. Goodbye.